What if I told you that the IRS allows you to earn thousands of dollars completely tax-free every single year that you're most likely missing out on? No matter if you are a business owner or a W-2 employee, this is a way to collect thousands of dollars completely tax-free, especially in this economy where everything feels like it has doubled or tripled in price. It's not a loophole, it's not a gray area, it's a provision in the tax code that the IRS included to give you a chance to earn tax-free income every single year that you've probably been missing out on for decades. It's called the Augusta Rule, and there's more to it than what people on social media talk about. By the end of this video, you're going to know exactly how to use it properly to put more money in your pocket every single year legally. Stay with me because this one is going to be worth every minute. IRC Section 280A, better known as the Augusta Rule, says you can rent your personal residence for 14 days or less during each year without having to report the income. The income is completely tax-free, but you can't deduct any expenses related to the rental activity during those days. It sounds simple, but there is a proper way to execute this, which will protect you in a case of an audit, as this is one of the areas that the IRS focuses heavily on due to how taxpayers can abuse this powerful strategy. We'll go into how to properly execute the Augusta Rule later on in the video, but for now, let's talk about who this applies to. Now, here's where most people get this wrong, especially on the videos and short form content on social media. They all talk about the Augusta Rule only applying if you rent your home to your business, but that's not true at all. This applies to everybody, W-2 employee, business owner, freelancer, retiree, it doesn't matter. If you own your home and you rent it out for 14 days or less in a calendar year, that income is tax-free and you don't even need to report it on your tax return. It sounds straightforward, but stay with me as there's always if, ands, or buts in taxes. So I'll show you exactly how to do this the right way to reduce any risk you have with using the Augusta Rule. Now, the majority of income earners in the United States are W-2 employees. So let's take a look at how a W-2 employee can use the Augusta Rule to earn thousands of non-taxable dollars every single year. The key is finding high demand events in your area where people need short-term housing and are willing to pay a premium for it. Think about what happens in your city or town throughout the year. Sporting events, the Super Bowl, the Masters, March Madness, the World Series, major concerts, political conventions, major conferences or trade shows, air shows, car shows, major local events. You get the idea, right? If any of these happen within driving distance of your home, you have a great opportunity in front of you. Here's a quick example to kind of visualize this and how you can use the Augusta Rule to make thousands of dollars tax-free every single year. Let's say a popular major music artist comes to your city to hold a concert for a few days. Hotels are all booked out and there are tons of people who travel to your city to attend this concert. You list your home on Airbnb for $1,000 a night for a long weekend, let's say Thursday through Sunday. That's 4 days and $4,000, zero taxes. Do that 2 or 3 times a year and you're looking at maybe $10,000 to $12,000 of completely tax-free income while staying well under the 14-day limit. The Augusta Rule essentially gives you a tax-free income window every single year. The question is whether you use it or let it slip through your fingers. Now for my business owners out there, if you own a business, the Augusta Rule gets even more powerful. And here's why. As a business owner, you can rent your personal home to your own business for legitimate business purposes. Things such as team meetings, strategy sessions, client events, board meetings. You can pay yourself rent at fair market value for up to 14 days for those events. But here's what makes it so powerful. Not only do you receive the rent from your business completely tax-free, your business also deducts the rent as a legitimate business expense, reducing your taxable business income. So what this means is that the same dollar that reduces your business taxes also comes to you as income without being taxed. That's a double benefit on the same transaction, on the same dollar. Now let's put some real numbers on it. You rent your home to your business for $1,000 per day for 7 days. That's $7,000. Your business also deducts $7,000, saving you roughly maybe around $1,500 to $3,000 in taxes, depending on your tax rate. You personally receive $7,000 completely tax-free. Without this strategy, the $7,000 would have been taxed as ordinary income. With the Augusta Rule, you get to keep all of it with no strings attached. Now, just due to the nature of how powerful the Augusta Rule can be, there are rules that the IRS has set to do this correctly. Now, rule number 1 is that you need to rent it for 14 days or less during the calendar year. The moment you hit day 15, the entire amount becomes taxable, not just the income above 14 days, all of it. So it's important for you to track your days carefully and stay under the 14-day limit. Now, rule number 2, fair market value. You must charge a fair market rental rate for your area and home. In other words, you can't charge your business $10,000 a day for an average home. It has to be defensible and reasonable, just like in anything else in tax. Look at comparable rentals in your area on Airbnb or Vrbo during the dates of your meeting to establish a rate. If you're a W-2 employee, just renting it out on Airbnb is much more defensible, as a booking would indicate that the daily rate is reasonable. It's an amount that someone would reasonably pay to rent your home. However, if you are a business owner renting your home to your own business, you're subject to more scrutiny. You need to document how you got to that daily rate that you charged your business to use for the meetings. Now, for example, you can't take the daily rate of a 20,000 square foot mansion to use as the daily rate for your 2,000 square foot home. It just doesn't make sense, and it's not reasonable. It's not comparable. In the case of an audit, you would need proper documentations and a defensible position on how you got to that rate that you charged for your business. In other words, don't charge your business $50,000 to rent your home for 14 days. It just doesn't make sense, and you will have a hard time explaining that to the IRS. Documentation and a defensible, reasonable rate is key when renting your home to your own business. Your business will also need to issue you a 1099 miscellaneous for the rent that it has paid, where you will then report that income on your Schedule E of your personal return. You'll then back out the same amount as an expense with the description of it being an Augusta Rule, which will net you in zero income on your tax return while fulfilling all your duties. Now, rule number 3, legitimate business purpose. For the business owner, the rental must be for a genuine business purpose, a real meeting, a real event. Document it, keep notes, and treat it as a real business meeting for a real business purpose. Rule number 4, no deducting expenses. Because you're not reporting the income, you also cannot deduct any expenses associated with those rental days. That's the trade-off. Tax-free income, but no offsetting deductions. One thing to keep in mind, if you are a W-2 earner and rent out your home on Airbnb for 14 days to strangers, any damages or expenses that you incur cannot be deducted. However, if you are a business owner renting your home to your own business, it's highly unlikely that you'll damage your own home. So there's a little bit of reassurance there for the business owners. Now, rule number 5, make sure you document everything. Keep records, rental dates, amounts, purpose, who was present. If Airbnb or your business issues you a 1099, you'll need to show that the income qualifies for the Augusta Rule by backing out the amount on your tax return. Now, for the business owners, you will need a rental contract for the days that your business will be renting your home. Remember to treat this as you would any business-related transaction. Documentations and formalities are key to be successful with this strategy. The Augusta Rule is one of the best opportunities in the tax code for business owners and also for W-2 earners. People hear about the Augusta Rule but don't understand exactly what it is and what the requirements are. Every year that goes by without using it is money left on the table, never to be seen again. The IRS already has a plan for your money. The question is whether you have one for yourself as well. Not just the Augusta Rule, but every legal opportunity for you to lower your tax bill to the fullest extent. That's exactly what we do here at Reserve Tax Advisors. We specialize in uncovering all the different opportunities you have to lower your taxes through a tax analysis process customized just for you. The number on your tax return isn't what you're legally required to pay, and you can take action to control your taxes to bring it down as low as legally possible. Schedule a consultation with Reserve Tax Advisors, and let's put together a plan that keeps your money where it belongs, with you, your family, and your business. The link to schedule a consultation will be in the description. Well, that's going to be it for this one. I hope you learned a little bit more about the Augusta Rule and how you can take advantage of it to earn thousands of tax-free dollars every single year. Thanks for watching, and I'll see you guys on the next one.